Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and my guest today is Dr. Milan Sambarak. Welcome to the show, Milan.
Thank you for inviting me. Delighted to be here.
Yes, it's always my pleasure. So, this Wednesday, and as most Wednesdays, the market is up, and it's not up just by fraction. It's enormous move almost in all sectors. And I must claim the credit that a couple of days ago on Monday, I announced on one of the programs on Pod TV, I've announced that market found its bottom. And from this point on, I expect a big move on the market in the positive side, of course. And well, today's action I think is a confirmation of that. Um, what makes me to believe that the bottom was found? If you look at the action of the market, primarily the high tech stocks, they were beaten down for the 2 months, almost 2 months, non stop. Every day. It doesn't matter, futures could be up overnight or down. The market could open slightly positive or slightly negative. At the end of the day, market would have been down. And that was going on for 2 months. Now, the earnings season is getting up. The banks reported spectacular earnings, especially Goldman Sachs. Yesterday on the closing, I bought calls. I did spread. Unfortunately, if I bought just naked calls, I would have done better. But still, it was good action, good timing. I made a little bit of money. Also, I made money also yesterday at the closing of the market. I bought naked calls on triple Q, and that also allowed me to make some money at the beginning of the day. And now I can see Jim Eid from Eid Foundation. Welcome to the show, Jim. Come on. Now,
Great
here
to
we
be here. Sorry I'm late. A little computer
are.
problems.
So we have a spectacular action, as I said today, and
Yeah.
as I said, on Monday I
All
made
screen.
public I made a public announcement on this network that the market found its bottom, and since the market, including high tech, of course, was badly beaten for the last almost 2 months, it was going down every day without exception. And I think now situation is changing, and without high-tech leadership, there will be no substantial move. So today, all market participates, banks, Goldman Sachs, spectacular earnings,
Yes.
and you have high-tech is moving up, and all indexes are moving up, including S&P, of
S&P.
which Mila, you are a big champion. So how do you feel about the market these days?
Me or Jim?
You.
You.
I'm concerned about the fact that Goldman Sachs and the Bank of America have stated that maybe not tomorrow, maybe not next week, but we're coming up to a point where the market will return 0% to 1% for a decade. Now, you described
Oh, and you are buying this bullshit. Goldman Sachs did 6% in one day, and you're talking about 0%.
you're looking here, Sasha, at short term, and what they're describing there is long term. The market is hugely overvalued. It dropped, it dropped, it dropped. You said 3 or 4 days, but when you take a look at the Buffett ratio, which is really the price earnings ratio of the market, it's enormously overvalued. So now
It
it's
was a good thinking in the 50s or 60s, not today. The action of stocks speaks by itself. It doesn't need interpretation of Goldman Sachs or any other gurus, including Warren Buffett himself. Watch the tape. They are talking to you. Don't listen to anybody
okay.
else.
Listen, we could discuss this for a very long time. So let me ask you a question, both
Okay.
of you. Both of you, I want to ask this question, which I really find very interesting, and I have no answer. I sold covered calls in 3 portfolios that my wife and I have. In my first portfolio, I got over $700 a contract. A minute later, I sold one contract in my wife's portfolio and got a little bit over $150. What's going on there?
Fluctuations.
Markets fluctuate, that's true. But by that amount, I've never
That's
seen
amazing. Yeah.
that. Yeah. So I wonder whether there's a way of taking advantage of that. You know, when you place an order to sell, you're given a choice to whether you go ahead or not. And if you don't like the amount that you'll be getting, you could just ignore that and try it again a minute later.
Yeah.
And try it again a minute later. So I'm thinking of doing that, and I'm going to see just what the results are. But yeah, in the long term, the market is overvalued. Over the last 200 years, it has returned about 10% annually, inflation adjusted, about 6% annually, not inflation adjusted. In the last few years, it's gone up over 20%. It has to rebalance itself. It has to go back to what had been the standard for 200 years. And that's what Goldman Sachs and the Bank of America are talking about. Watch the tape for a month, for a year, or for a decade. That's the thing. I'm concerned about it because when that happens, what are we going to do? When the market is rising, cash is trash. When the market is failing, cash is king. So we should all be in a lot of cash, at least. You know, asset allocation is so important. David Svensson said that picking stock doesn't work, timing market doesn't work. I mean, there's not a chance that you will equal the market by doing that. And so if we have a 50-50 asset allocation, that 50% cash ought to keep us for as long as we need to be kept if we have saved appropriately. You know, that there was a survey done of a large number of university students, and they were asked what they would do differently if they had to do it over again. And the overwhelming response is, I would have started saving earlier. But saving is the most difficult part. People get married, they got a mortgage to handle, they're going to buy a new car, they got kids to raise. Kids are expensive. The average child, from diapers to diplomas, costs about $300,000. You have a couple of children, which is not unusual. All these people have an enormous debt burden. How can they save? But they should. They should pay themselves first. Pay yourself first. You know, the amount that you save depends on 3 factors. One is the amount you put aside, of course. 2 is the interest rate. 3 is the length of time that that money is cooking. And that one is more important than the other 2. So if you can't save 10%, save 5%. If you can't save 5%, save 1%, but start early. So that's what I would advise people: start early. Who's making that noise, me or you?
Me, it's on my part. Let me try close the door. Maybe it will help. Just a sec.
Well, Milan, while Sasha's doing that, I wanted to say a couple of things in response. One was when I got out of college, you know, my first paycheck, I invested in the company that I was working for, which I was lucky enough it was AT&T, and eventually split off into Pac Bell. But I paid myself every paycheck first, and I invested it. That was my way of saving, because in my early 20s, if I saw the money, I spent it. So I wanted to do this every paycheck, and that was my method of saving. But to respond to the Goldman Sachs and Bank of America, you know, the prediction of the future is beyond all of us. However, I think that I've been hearing that the recession is happening within the next 3 months for 5 years now, and I've been hearing all sorts of bad news just around the corner. But when I look at the fundamentals, I look at revenue and I look at debt, and the companies that I invest in have very little debt, if any, and have a strong revenue stream. Now, what I look at is that revenue stream going to grow? Is there anything that's going to affect it? Is there a competitor out there that's going to take market share? all those types of things in my analysis of whether or not to buy a certain stock. And what I see right now is the economy is still strong. The companies are making record amounts of profits, and the revenue streams of the companies that I am investing in are very strong and getting stronger. Their market share is not diminishing, it's growing. And so when I look at those factors, that's what guides me, not what some institution thinks is going to happen in the future. Because the recession that they've been predicting for all these years hasn't happened yet. I see no reason for it to happen. But we aren't in control of world events. Who knows what's going to happen? And there's all sorts of things that are around the corner. And whether or not the stock market is overpriced, it's the market sets the value of these companies. And you can look at Apple, and Apple has been an incredible company to invest in for a very long time. It's destroying all of these myths of it will, return to the mean. But that's the thing about investing in stocks that you have knowledge of, the industry they're in, you know what's going on in the world around them. And these are the types of things that ease my conscience when I worry, because, we can all go down the spiral of disaster thinking. And disaster might be right around the corner. The recession might be right around the corner, but I see no evidence of it. And I'm evidence-based when it comes to investing.
Well, James, what would you say to David Svensson? David Svensson headed the Yale University Endowment, which was the #1 best performing university endowment on the planet. And he said, if you're picking stocks or timing market, there's almost 0% chance that you will equal the market in the long run. And
my response to him is he had an investment portfolio that dwarfs mine by orders of magnitude.
Of course.
And so he could play a different game than I do. Yeah. And so I think that makes sense for him. In the funds that he was managing, picking individual stocks doesn't make much sense. And I also agree with him in the general sense that most investors are unsophisticated and getting involved in things that they don't understand, and in buying individual stocks because someone next to them told them it was a good stock. This is a lot of the people that are in the market really shouldn't be, but those are the people that are, that are paying attention and invest in what they know and are disciplined and not emotional when it comes to their investments, can do very well. So that would be my counter argument to him.
Well, equaling the market is not a difficult thing. You can teach a high school student to do that in a matter of 2-3 minutes. But most investors are losers. Most investors in the market don't equal the market. They do exactly what Wall Street wants them to do, which is trade frequently.
Yes, I agree with that.
And don't hold your stocks very often. Just keep on trading. And Wall Street keeps on making money. So, yeah, what you say is quite true, likely, that if you have a portfolio which is just a tiny fraction of David Svensson's portfolio, you could behave differently and take advantage of that. He couldn't turn on a dime, and you could.
Yeah, that's correct. Yeah.
I disagree with the theory that most investors are doing whatever Wall Street wants you to do. I don't see any evidence of Wall Street wants you to do this way or that way. The commissions today are so tiny, especially with the brokerage, the discount
brokers. Yeah.
So they are absolutely meaningful. I have also problem with Goldman Sachs statement. Because if you do believe Goldman Sachs, and probably most people do, so the action, what it encourages is to sell your stocks, to go into cash. Now, for every seller, there is a buyer. And don't forget that on the other side of the trade,
it's Goldman Sachs.
Maker. Come on, sell it. There is a recession, there is this, there is that. So I would completely ignore the Goldman Sachs or anybody else suggestions. Suggestions that you do whatever Wall Street wants you to do, ignore it. Put it in a garbage can. There is no use of it. This all whatever Goldman Sachs says, and 75 cents used to buy you a cup of coffee. Not anymore. Now it's more
Yeah.
than 75 cents, but it's really all what it
A
is.
nickel used to buy a cup of coffee.
Milan, there is no, let's leave the job of Goldman Sachs to Goldman Sachs. Don't
And
drag
Goldman Sachs is not telling the people that it funds they manage, the personal portfolios of people that they manage, they're not telling them to get out of the market.
Now, the thing is that Goldman Sachs, the only clever thing what they're doing, if there will be a zero return for next 10 years, so they actually bought themselves in indulgence of not making any profits, maybe saving 2-3% a year. Well, look at the market did zero. So we beat what market actually did. So look at how well we've done. But what's happened if the market will skyrocket 30, maybe 40% in next year? So what's Goldman Sachs going to do about their announcement, Milan?
Yeah, they're going to be fully invested. But the other thing that happened was that the Treasury rate, there was a lot of fear that it would hit 5%, and it didn't, and it's actually gone down. So stocks are going up, and bond returns are going down, and that's an ideal investor scenario if you're in the market. But Goldman Sachs and those people, they're fully invested in bonds as well. They have spread their wealth in many ways. So there's a lot of hedging, and they're so complicated that what they do, that it doesn't really apply to the individual investor, and the individual investor would be wise to take Sasha's advice and take it with a grain of salt at that.
Yeah.
You have to read the tape. You have to follow what market tells you, not Goldman Sachs, not Svensson, not other guru. Watch the market. That's all what you have to do. For example, after I did money from yesterday's trade on Triple Q, I continued that today. I bought shares of Triple Q and sold covered calls deep into the money, calculating that my profit almost guaranteed, not as much as if I would simply bought Triple Q without selling covered calls, but I locked in the profit. For example, when Nvidia was going down almost every single day for the last 2 months, what I did, I sold deep into the money. October 140 calls. You okay, I will tell you what premium I got, $28 for each call. So we are talking about more than $55,000, which completely insulate me for even worrying about where Nvidia is. Unfortunately, I sacrifice enormous share of my profits if I wouldn't sold them. But what I did guaranteed me the mechanism of keeping all my stocks without worrying about either my margin calls or changing the position. Could be tremendous. Let's see. There were some people who were talking Nvidia is a lost case. It will go down to $110. Could it go to $110?
Sure.
Probably not, but theoretically, yes, it could. So by selling this deep into the money calls, if you subtract from 140 and you subtract what I got 28, so I'm almost even, I'm almost break even if Nvidia will go indeed down to $110, believe it or not. Not that I believe that this scenario,
Sasha,
but I did cover myself quite nicely.
the deeper into the money, the more you make, right?
And time.
Okay, all right. Now, what are the risks of that? Because the more you make, the greater the risk you take. And I don't understand the risk of going deeper into the money, but there must be some.
Yes, I'll explain to you. The risk is that, theoretically speaking, NVIDIA may go lower than 110. Maybe it will go to 75, or it could go down to 55, or maybe to zero, okay, extreme scenario, right? So that does not cover you completely at all. However, to be on a practical level, 110 last time was almost a year ago. So thinking that Nvidia with a rising market can still go down to 110 is very, how should I say, highly unlikely event. Okay, if it's highly unlikely, then what's the other downside is that let's see it will skyrocket to say 170 $180, which is not unthinkable. I think it's more likely than going down to 110, but I sacrificed a significant portion of my profit if that's the case. So my price of Nvidia is 135. So at 140 call, I still making a little bit of profit, not as much, but still, plus premiums that I got $28 for each call. So the downside is that it's only in October. But I could have done, say, August, I could have done July. I would get less money though,
Right.
but
Right.
still.
Sasha, I was just reading this article that it was basically the headline was sort of like this guy is down rating NVIDIA. But when you read the article, what he's doing is he's saying that they're going to make he's down forecast is down from 200 billion of revenue to 185 billion. So 185 billion is hardly something to sneeze at. That's excellent. And he says that the overall target price that he's put on the stock is 180. So, what sounded like a negative, he's lowering his forecast for revenue, but he says that the things that are going to affect NVIDIA are in the short term, and, he's still bullish on it.
I mean, okay, there are some headwinds against NVIDIA. It's a policy about China that NVIDIA will not be able to export its chip to China. That's in place. A few other factors.
And that will get worse under the current the next administration.
Right. So if it wouldn't be the case, maybe NVIDIA would be 180 by now. But obviously it's not, and maybe that's the reason there are headwinds. That's why the market sort of cool off about NVIDIA, but the fundamentals are still there. It's just a matter of time when it will all click in. There is upcoming earnings in February, so we'll see how things will turn. Obviously.
Yeah, because 185 billion in revenue is amazing, and because it's down from his previous forecast of 200 million, people are looking at that as, oh, that's negative news. No, it's not. It's just not as optimistic as it was.
Are you quoting an analyst, James?
Pardon me?
You're quoting an analyst.
That's correct. I looked at it because it sounded like it was a negative on NVIDIA in general, but when I read the article, it was actually quite positive.
You cannot trust analysts at all because they're all in somebody's pocket.
I agree with that in general. Yes.
The only analyst that you can trust is Morningstar. Morningstar is totally independent, is not in anybody's pocket. And so reading Morningstar analysis is safe and makes sense.
When I was teaching myself to be an investor, I regularly consulted Morningstar. I have favorable experience with them.
Yeah.
Yeah, well, there are a lot of stocks that are not necessarily covered by Morningstar, and yet they're doing tremendously. They're going up in very significant numbers. And so where is the Morningstar not covering this?
Well, we encourage our members not to pick stocks, just to pick the American market as a whole, as represented by an exchange-traded fund which tracks the S&P 500, and the best case is SPY, and just hold that. And when it drops, buy more. When it rises, take profits. It just so totally makes sense. It's so simple to do. It takes almost no time.
This idea that it's going to return to the mean or have to correct or something like that. The Nasdaq, it's at 19,500 right now, and I remember in the 1990s thinking that if it cracked 5,000, that I would be set because I had my investments and they were mostly Nasdaq based, and at that time, it was well below 5,000, and I just thought beyond my wildest dreams it would crack 5,000. Well, it's approaching 20,000 now. Now it's not going to correct to 5,000. It's just not.
Yeah.
So, we have to readjust our thinking based on what's going on now, not as opposed to 25 years or 50 years ago when Milton Friedman was the best source of economic thinking at the time.
Let me ask you one thing. So, if Goldman Sachs believes that there will be zero return for next 10 years or so, so if market is skyrocketing right now while we speak, it's still moving higher and higher and higher. So let's see, it will move probably easily 10% in the next couple of months. Usually from January to March, market is moving up at least 10%. So according to Goldman Sachs, that should be followed by correction of at least 10%, right? So to make it zero.
Yeah.
Now, Milan, what to do with S&P investing at the point that the market will make 10% profit, and then according to Goldman Sachs, you have to get out of the market immediately. Is it correct?
As the market rises, you take profits, not individual stocks, but take.
No, okay. We are talking about the market, S&P.
As the market rises, we recommend taking profits to reestablish your asset allocation, which should be about 50-50, 60-40 works, 50-40, 45-50, doesn't matter. So long as you have a lot of cash there and you rebalance to reestablish your asset allocation as the market rises. And as it drops, you buy bargains. And the more it drops, the more you buy. And if it drops sufficiently, you can safely borrow to buy. And so that has worked so well in the past, and it makes so much sense. Why wouldn't it work in the future? People who drive across town to save a couple of bucks on groceries are running for the doors when the market is a bargain. They're always looking for bargains, but not when the market is a bargain.
You know what's difficult about the market being in bargain? That tomorrow it could be even bigger bargain, but you're already in the market, so now you keep losing even more money, and then you borrow more money, and then you'll get out your furniture from your house to get even more money to buy more stocks. It could be quite a dangerous proposition.
That has certainly often happened with individual stocks. And people has lost their shirt investing in individual stocks, which tanked and kept on tanking. You don't buy bargains there. But the American market, nowhere near tanking entirely. Like I mention frequently, markets have 100%, empires have 100% failure rate, but the failure of the American empire is nowhere in sight. Everybody wants to be in the American dollar. So it keeps on rising. So you can safely buy more as the market drops. You'll never get to a point where you have to sell your furniture.
You know what? I have difficulties to accept that in individual stocks. So obviously it could go much lower or so on. But S&P 500, it's a 500 individual stocks after all. So why you think that 500 stocks are acting so much differently from one stock? Of course, they're not the same, and the action is not the same. But still, whatever applies to one stock, if it's downturn, it will apply to 500 stocks just as well.
Yeah, the S&P 500 contains within it a lot of winning stocks and a lot of losing stocks, of course. But it does represent the American economy as a whole, which is the strongest economy in history ever, and has been that way for over 200 years, and has always bounced back. And that will not continue forever. But the end is not visible yet. So,
but Milan, you have to understand that it's only 10 stocks out of 500 are really doing anything. The 490 stocks.
Well, one of the things I look at when we talk about the overall American economy is the American economy bounced back from the COVID pandemic better than any other major economy in the world. By far, it was a profound recovery, and so the other thing is you look at China, an aging population. Its economic struggles are just beginning. They've been going on, and the government's approach to them is becoming more and more obvious in terms of their intervention to try to stimulate their economy. You look at Japan, it's again an aging economy, debt ridden. You look at England, no economic growth, lots of debt. You look at all of these other countries, and none of them look promising the way that the American economy looks, at least to me. And that's why people are still moving money into the dollar, although there's a tremendous amount of resentment. And we see BRICS, for example, the other countries organizing to be able to contest the American influence in the overall global economy. But this still, I'm all for competition, so fine. But, they're still on the outside looking in. They're not as strong as the American economy. Not yet.
What influence will Trump have on the market?
Yeah, well, it's if people talk him out of this crazy idea of using tariffs the way he's talked about it, the crazy idea of trying to intervene to militarily grab back the Panama Canal, Greenland. If people talk him out of the things that he's been talking about, and I do think we know that he's a lot of talk and very little action when it comes to that. But I think the American economy can survive whatever his crazy ideas are, as long as people around him have some control over him. But he's surrounding himself with sycophants, so there's a danger.
Right. Yeah.
In his previous term, he had people around him that could talk him out of his craziest ideas, and I'm not so sure that's going to happen this time. But who knows? I'm taking a wait and see approach. I'm done prognosticating.
Interestingly enough, recently he started to talk about not only Greenland and Panama Canal, but also about Canada. And what's interesting that neither of that was his pre-election talk. He never, ever said anything in his pre-election talk. Now, when he's already elected, now he's going with all kind of strange propositions. And I'll tell you, I'm not a big fan of our Prime Minister Trudeau. He's going to be re-elected very soon. But he said one very interesting thing about Trump. Look, I was dealing with Trump 4 years ago in his first cadence. And I know his strategy in negotiation when he is bringing up all kind of this strategy works very well in a private business when you want to buy a piece of real estate and so on. It's a transactional aspect of it, that you win, the other side lose, and you walk to a next deal. Now, in international relation, it doesn't work that way. For example, today in Ottawa, we have a meeting of all 10 premiers of Canadian provinces, and they are discussing joint retaliatory measures against 25% tax that Trump won't impose on Canadian suppliers. Not only that, the Denmark now is reminding US that 75% of all Ozempic drugs are coming from Denmark. There are other valuable goods that are coming from places like UK, places like Germany, where
it's a global economy. He doesn't know that yet. But
look at this. What's his name? Elon Musk. He is proposing. He's attacking governments of European countries. So now, also with the threats of Trump going out of NATO, European Union is also considering the joint action against Trump way of conducting the business. And what's the most interesting thing is that Canada is looking now very closely of joining European Union. And the stock of Canadian people are mostly 99%. It's Europeans. It's people from places like Germany, France,
Scotland.
Serbia, Holland. I mean, so European Union would love to have Canada join because Canada has enormous mineral resources,
And
which
ties to the
which
UK.
the
Yeah.
European Union doesn't have. So this would be a major development, and it's all thanks to Trump foreign policies, his thinking, his talks, and all that stuff. So this is quite an interesting development, and we'll see which way it will be played out. Now, the Ukraine is becoming now a hotbed. There was a Chatham House a few days ago. They had a 3 days session which includes all the brightest minds of the European Union, and they discussed. And you know what? They came to the point. It doesn't matter whether Ukraine will be accepted in NATO or not. Ukraine must be a vehicle of European security because it's the only country that has been fighting Russia for 3 years now. What other European countries on its own can withhold Russia for 3 years? Zero. And Ukraine has done it. So now, if Ukraine will be incorporated into European security structure, new structure, and probably without even United States, so that will put Trump back into his place and will teach him a lesson. Watch his mouth, Mr. Emperor.
You know, this meeting is going to look a lot different a year from now, and it's going to look different in an unpredictable way. We don't know where things are headed.
Yeah,
But
I agree,
things,
Milan.
things have never been better in history. You know, people are living longer than ever before. Healthcare is better than it's ever before. Things like polio and various other diseases, tuberculosis have been defeated, eliminated. Most people are economically better off than they used to be 10 or 15 years ago. And so things are
Even if the price of eggs is going up. Unfortunately, many people vote. But, there has been a strong sense of far right wing forces becoming more in control of various governments. We see it. What was once a laughingstock of a party in France is now a major player. We're seeing another rise, and Elon Musk is backing a far right rise in Germany. This is going around in most countries, and most of it is about because there's a mass immigration going on because due to climate change and other forces, people who cannot live where they used to live are leaving in desperate straits and coming into countries all over the world. It's not just America. Americans think it's only us. It's only our borders that we have to control. It's going on everywhere across the world. People are dying trying to get to Italy. People are dying trying to get to Spain and France.
Without immigration, Canada's population would be dropping.
Of course. And, immigration has we're all immigrants in America, almost all of us.
Yeah.
So, we really have to stop being afraid, stop being scared, because things are, as Milan said, better than ever. And, kings did not live the way I live.
Oh, right? Absolutely. Yeah. That's right.
You know what? We can accept that Trump, in order to win election, he could come up with all kinds of promises and slogans and whatever. But he won election already, right? In a few days, 5 days, he will start to govern. And we will see how effective is Trump's government and what he's going to do. I really hope that American economy will not be killed by Donald Trump and his actions, especially tariffs and
the biggest, stupidest idea that could threaten the overall market. It's a global economy. We can't, first administration, he talked trade wars were easy to win, but he didn't tell us it was the other side that would win. So, trade wars are not in anyone's best interest. No, he needs to get out and let the economy do what the economy does.
Well, he doesn't drink, he doesn't smoke, and he's never started a war. Obama got the Nobel Peace Prize when he got elected, and he either started or maintained the war in every year of his 8 years presidency.
Which war did he start, Milan?
I can't think of any, but I'll let you know next week.
All right.
I'll
Yeah,
check.
because I want to fact check you on that one.
All right.
Okay. Excellent. Guys, thank you so much for today's program, and have good luck in trading next few days, and see you Wednesday next
Great to
week.
be here as always, Sasha. Thank you for having me.
Thank you for
My
having
pleasure.
me.
Bye.
Bye, everybody.
Bye-bye.